Welcome back to Simplexity Analytics Seasonal Report for June of 2023. The month of June is kind of a slow month seasonally for most markets, but this month we do have one market that is the most bullish, and that is sugar, and we have two markets that are the most bearish, and that's wheat and lean hogs. We'll also go over the S&P E-minis in this video, and gold and 30-year bonds are available on the website. First up, let's have a look at the wheat market. Now, the wheat market is going to be an interesting one to follow for the next month or so because it is set up fundamentally to be very bullish right now, according to fundamentals compared to the other grains. But seasonally, it's the most bearish month of the year. So if we look at the indicator at the bottom here and look where June is, June was here last year, this decline. And in 2021, this decline, and we see it's actually predicting a much greater decline this year, but that's because it's taking into account the massive sell-off we had from the big rally last year, which occurred in June. The seasonal weakness in the wheat market doesn't really come in until about the second week of June here, and gets even stronger towards the end of the second week and into the third. We have a lot of dark reds in this area here. We have a lot of good dollar values and a lot of good percentages. So this is the area to key on for short sells in the wheat market. The big question for lean hogs is how much further can it go? It's already been on a big decline for the better part of half a year now, and now we're heading into its most bearish time of the year for June. As we see the indicators in June, see this big steep decline here, and also projected this year of 2023. How much further can it really go? The seasonal heat map for lean hogs, it's pretty simple. It's all 1 week of the month, and that's the third week in June. We have a ton of dark red numbers, big percentages, and pretty big dollar values. We have over $10,000 on a lot of these days. So really, on this shortened week, because of the holiday, look for short sells right away on the Monday and hold them for this week, as it's a very, very weak time of the month. And lastly, here's the seasonal chart for the S&P E-minis. Now, there's a few things I want to cover here with the S&P E-minis. June is the third most bearish month of the year. It's not the most bearish, but it is the third most, and it does return 52% positive results. So how can that be? Well, when you're looking at seasonality or really anything to do with the stock market, historically, is the stock market goes up in value over time. So it has upward drift. So when you're looking at results, sometimes you'll get positive results, but those positive results are less positive than other results. So you have to rank them. So that's what this is. So even though 52% of the returns are positive, it's still the third worst month of the year. And over the course of those 20 or so years, it's almost lost $9,000 in value. So when we look at the indicator itself, here's June 2021, here is June 2022, and here's a projection for June 2023. According to the heat map for the E-minis, it's really pretty choppy in here. We got a lot of red and a lot of green mixed in together. But if we look, and we want to look horizontally across the lines here, the true weak area would be at the very end of the first week, and the third week has a lot of red. But we look right after that red here in the third week, we head into a pretty bullish area here at the end of the month. So use caution. It's pretty choppy this month for the E-minis, although it does have a bearish slant to it. Thanks for watching. Remember to like and subscribe and hit that notification bell so you're notified on our next videos. Simplexity Analytics, making complex trading simple.